I hope that you enjoy the day and celebrate. And again, thank you for being here. Please do remember to, if you have to take a telephone call, please leave and do that outside of the auditorium. We would appreciate it. I'm just going to tell you a little bit about our speaker. Hank Halter is the CFO, Chief Financial Officer, and the Senior VP for Delta Airlines. And as the CFO, Hank is responsible for finance and planning of Delta's $32 billion operation. So no small potatoes there. In particular, he oversees the treasury, tax, risk management, accounting and reporting, financial planning and analysis, fleet strategy, and investor relations for the airline. He also directs development of annual and long-range business plans and works closely with operating units to ensure financial performance objectives are achieved. Hank came to Delta in 1998 from American Airlines, where he held various finance positions in corporate reporting, financial planning, and corporate real estate. Hank holds an MBA from Duke University, but we won't hold that against him, a BS in accountancy from Villanova University, where he graduated summa cum laude, and his CPA. In addition to being a member of the Board of Directors of the Boys and Girls Club of Atlanta, he also serves on the Board of Trustees of the Delta Heritage Museum. Originally from Savannah, Georgia, Hank now resides in Atlanta. Please help me in giving a warm welcome from Clayton State University to Hank.
Well, thank you. Thank you very much. It is an honor to be here. This is my first visit to Clayton State, and I appreciate the invitation. And I'm very excited about the opportunity to come talk about Delta Airlines. I'd like to think all of you are platinum or diamond level frequent flyers on Delta. If you're not, I have an application I can get you, and we'll get you signed up right away. But you know, I think in today's age, most everyone has had an opportunity to travel or knows someone that's had an opportunity to travel. It's very commoditized now, and it's a very challenging business. As you heard, I've been in the airline business for many years. I started in 1993 at American, and then 5 years later, I saw the light and came to Delta, and I couldn't be happier being at Delta. We've been through a lot of change. Those of you that have followed Delta throughout the years saw Delta in 1998 as the most profitable carrier in the world. We earned $1.1 billion. And then unfortunately, in 2005, Delta had to file for Chapter 11 bankruptcy restructuring with the aid of the courts to restructure itself. We came out of bankruptcy a short 19 months later, and the Delta you see today is a product of an awful lot of work across 75,000 employees globally to create the company and really create the customer experience that you have today. So I'm going to go through about 18 slides. I'm going to go through them rather quickly. So please, at the end, if you have any questions, I'd love to have some dialogue with you about those slides. I'm going to talk a bit about the airline business first, and then specifically Delta, and then give you an update on various priorities at Delta, in particular our merger with Northwest Airlines that we closed on in October of 2008. I'm also going to talk about the customer experience. I think that's most important for you as a customer of Delta, what you can expect going forward. And then really I welcome the opportunity to field any questions you have about our business, both Delta and the airline landscape overall. First, just keep in mind the safe harbor rules. The slides I'm going to show you, some contain non-GAAP financial information. And if you'd like a reconciliation of that, feel free to check delta.com. Giving some perspective about the company you see today, Delta Airlines, Delta is made up of many airline mergers. Back in 1970s, Delta acquired Northeast Airlines. Back in the late 80s, 1986-87 timeframe, Delta acquired Western Airlines. Then in 1991, Delta acquired the transatlantic operations of Pan American World Airways. And then most recently, Delta acquired Northwest Airlines in 2008. And you're seeing the merger ongoing as we have today. And when you look at Delta and Northwest individually prior to the merger, you can see that each of us were regionally strong but globally weak. When you look at Northwest domestically, they were the number 7th player in terms of market share. They were number 1 or number 2 over into Asia and the Pacific, but they were really non-existent in other parts of the world. Delta was very similar. The number 3 carrier domestically, number 1 across the transatlantic, both to Europe and Africa. But over in Asia, Delta was almost non-existent. In fact, Delta just had 3 flights a day over to Asia. It was Shanghai, Tokyo, and Seoul. So individually, we had gaps in our networks. As a result of the merger, you can see that Delta is now #1 in every market we serve, with the exception of Latin America, where we are #2 behind American Airlines. We've also embarked on new service into Australia. So we fly direct out of Atlanta with a stop in Los Angeles and continuing service over into Australia. So we serve 6 continents across the globe. And Delta has now a market presence of very significant size in each of the regions of the world that we serve. To give you some perspective on the airline landscape in terms of size, this slide represents the capacity that the airlines have. So for Delta, we have 235 billion available seat miles. An available seat mile is a unit of measure that the airlines use to determine size and scale. As you can see, Delta is about 1.5 times bigger than the next largest competitor, American Airlines. We're about 2 times bigger than Continental Airlines and almost 3 times bigger than U.S. Airways. So Delta truly is, both on a domestic and global landscape, certainly a very, very large player, and we have consequently a lot of capacity in every part of the world that we serve. Now, 2009 was a tough year for the airline industry, but you think about it, 2009 was a tough year for any industry, whatever space you're looking at. And you can see here that Delta had a significant loss of about $1.1 billion. There were 3 carriers in the United States that were profitable, Southwest, JetBlue, and AirTran. Their profitability was driven primarily because of the markets they serve. If you think about the U.S. recession versus the global recession, you think about where those 3 carriers served versus the other carriers in the parts of the world they served, you can see that how the recession impacted carriers differently. For the carriers that were focused solely in the domestic United States, and again, Southwest, JetBlue, and AirTran, where 99.9% of their operations occur, they saw better results in 2009 because the U.S. economy had already started rebounding far ahead of some other parts of the world like Europe and the Pacific. A carrier like Delta that is very large in the Pacific was disproportionately impacted by the H1N1 virus. If you remember last year, come February, March timeframe, when that H1N1 was front and center, our traffic in the Pacific region fell precipitously. Europe also suffered through the recession and continues to suffer, and as a consequence, Delta has adjusted its capacity to better reflect the changing demand patterns. But in 2009, there was also another driver that significantly impacted all of these carriers, and that was the fuel hedges. Just about every carrier had fuel hedges last year, and those fuel hedges generated significant losses. For Delta, the cost of those losses plus the premiums we paid for those hedges was about $1.4 billion. And that $1.4 billion is driven by 2 years prior when Delta was buying fuel hedges. Delta was buying fuel hedges when fuel was expected to rise to $200 a barrel. And you saw what happened last year. It fell precipitously. In fact, I think we started 2009 at about $35 a barrel. And with most of those fuel hedge contracts, at least the ones that Delta and the other airline carriers had last year, those fuel contracts generated significant losses because we were locked in on a price. If fuel prices fell, we were paying the higher fuel price. And that's why you see disproportionately large losses for several of the carriers. To give you some perspective of how the underlying business operations did, the business of flying passengers around, this slide readjusts that data. So if all the carriers paid market fuel price, and what market fuel price is simply when you go to the gas station and you're filling up your car, maybe you're paying $2.68 a gallon, you're paying market fuel prices. If all the carriers last year paid the same fuel price, $1.80 per gallon, in fact, for 2009, you can see that Delta would have made almost $300 million of profit. Delta would have been the only global carrier that made a profit. And of course, you can see how the domestic carriers fared, Southwest, JetBlue, and AirTran. They also would have been profitable because of the benefits of the U.S. landscape. But at the end of the day, the reality is the airlines lost significant amounts because we were hedged and we did incur those significant losses, and you saw the number on the prior slide for Delta in particular. But at the end of the day, the underlying business plan of Delta, the business plan of growing the airline globally, the business plan of investing in our customers, investing in our employees, investing in back office systems, technology, infrastructure renewal, all of these things collectively are working positively for Delta, and that's evidenced in the numbers that you would have seen in 2009 had those fuel hedge losses not impacted Delta nor any other carrier. You know, the expression is cash is king. I think everyone's heard that one way or another, and in the airline business, that is more important than ever. And for 2009, despite that very significant loss that Delta had, we started the year at $5 billion of liquidity. And for Delta, liquidity is largely cash. We do have some what we call revolvers or bank lines of credit that we also count. We started the year at $5 billion. We ended 2009 with liquidity of $5.4 billion, so we actually grew our liquidity. It's important to have significant cash resources available in times of crisis. Fortunately, we did not have to draw on those resources to any significant extent. In fact, we generated $1.4 billion of operating cash flow. And I think for all of you, you're familiar with operating cash flow. Occasionally when I meet other Delta employees that are less familiar with the finances of the company, I equate operating cash flow to your paycheck. Delta's paycheck last year was $1.4 billion. That's the amount of revenue we collected, less the amounts going out the door to pay for salaries and fuel and maintenance and other items in the income statement. We had $1.4 billion of liquidity left over. And we invested over $1 billion of that $1.4 billion right back in Delta. We bought 20 new aircraft. Hopefully you've flown on some of those new aircraft. We bought 6 what we call 777LRs. Those are the aircraft that can go very long haul. They're an international aircraft. The aircraft we fly, for example, originating in Atlanta that goes over to Sydney, that's one of the new aircraft, the 777LR. We also bought 6 narrow-body aircraft to fly some what we call thin, densely populated routes, but that can go into South America. So about 128 seats is what those aircraft accommodate. And then we also bought 8 regional jets, but not the 50-seat regional that you may have had and may not be popular with you or some of your colleagues. We bought the 2-class regional jet, one that has a first-class cabin to accommodate the needs of our passengers that want a first-class premium experience, but one that's also very comfortable in the coach section for the leisure traveler, one that's very value-oriented. So we invested $1 billion not only in aircraft, but in technology and infrastructure renewal. We invested in technology to give our employees tools to do their jobs more efficiently, to better serve their customers when they're working with customers. And at the end of the day, we believe that is a recipe for success, is investing part of your cash flow from operations right back in the business. And then we also were able to refinance several upcoming debt obligations that also generated significant liquidity based on the financial strength and confidence of Delta's balance sheet. So at the end of the day, we ended 2009 despite a 20% drop in revenue, despite a $6 billion drop in revenue. We actually grew our liquidity balance to $5.4 billion. Now, as you look at 2010 and think about it going forward, what's on our plate? Well, number one, our mindset is focused on completing the integration, combining Delta and Northwest Airlines as quickly as possible. And you know, if you think about the recession, did the recession do anything? Is there anything positive about the recession? I'd say there's a couple things for Delta, and one is it enabled us to accelerate our integration. You know, we closed on the acquisition of Northwest in October of 2008. And you know, a year and a half later, we are substantially done. We thought that would take us about 2.5 to 3 years to fully integrate both airlines together, and today we're just about there, and I'll talk more about that briefly. But there's $2 billion of benefit that will come annually to Delta through the acquisition of Northwest Airlines. Last year, we recorded almost $800 million of benefit from that merger already in the first full year. And this year, we're expecting to take that number up another $600 million through higher revenue and cost-benefit opportunities. In terms of our revenue, passenger revenue, we want to generate a revenue premium. And that is, we want to generate higher revenues through focusing on premium customers as well as value-oriented or leisure customers, but investing in our product to give our customers reasons to want to pay a little bit more for the Delta product, but exclusively fly Delta Airlines. There are leisure, value-oriented customers out there, but we want to give them even more reasons to stay on Delta and give their business to Delta exclusively. And at the end of the day, we're also very focused on improving our balance sheet. We have numerous debt obligations coming due in the upcoming years, and our objective is to take that cash that we generate from flying passengers around and use that cash to pay down debt. Just like when you have a mortgage or a credit card obligation coming due, you use your paycheck to help pay down those obligations. We want to do the same thing. We want to get out of the habit of just refinancing debt when it comes due, and we've got a roadmap to get us to do just that. So I'll talk more about the balance sheet in upcoming slides, but at the end of the day, using the cash that Delta generates to put right back in the business, both in our employees and our customer experience and infrastructure, but also improve our balance sheet by paying down our debt with the cash we generate. To give you some perspective, I think everyone's questioning, well, you know, what are you seeing in the economy? How is the economy affecting your business? This slide here gives you an illustration of the past 14 or 15 months and how the U.S. recession or global recession has impacted our revenues. What you can see for the first 12 bars, they're all negative, and what that represents is our unit revenue change year over year. So the first January bar there shows about a 5% decline. That's January 2009 unit revenue compared to January 2008. And it was down about 5%. And if you follow each successive month, you can see in June our unit revenues were down 23%, Again, June 2009 compared to June 2008. But then as 2009 continued, you can see the bars, while negative, were getting smaller. And what that meant is we were starting to see the impacts of the recession unwinding. We're also seeing the pent-up travel demand. You know, you can, if you're a business, you can forego travel for some time, but at some point, you've got to get back on the road and meet your customers. You can always do teleconferences and other things, but also the value of a face-to-face meeting can't be put off indefinitely. So we saw the impact of travel coming back. We also saw some value-oriented passengers being willing to let go of some of their funds and get back on the road themselves and take vacations and other trips. So you can see by the time we got to January 2010, unit revenues were now on the uptick. And in fact, we're up about 16% year over year for the month of March. And that's encouraging. That means our unit revenues are improving. Passengers are paying a little more for their tickets than they were a year ago. And that's because of increased demand. And Delta's picture here is very similar to what we're seeing across the airline space. It's very similar. Passengers are getting on the planes again. Business travel is coming back. And in fact, my next slide, I think, is very illustrative of the business experience. What this slide represents is just Delta corporate sales. So when we sell a ticket to a corporate customer, the data here is reflecting that. And you can see last year a similar trend on our corporate business. Both corporate ticket volume as well as corporate ticket revenue was down in the April, May, June timeframe. It was down about 35% on a volume basis and nearly 50% on a revenue basis. But then as the year progressed towards the end of the year, you can see those business travelers were getting back on the road. Those revenues were coming back, still negative, but you can see we crossed it in January, and then in March we're up about 32 and 34%. So revenue still lags the volume a bit, and that's expected because the ticket prices are still lower year over year than they were even for our corporate travel. But the encouraging sign is that unit revenues are up and that businesses are getting back on the road and doing business. Because if they're flying on Delta, they're doing business, and if they're doing business, that's improving the commerce. And at the end of the day, that brings more economic benefit to all the parties throughout the cycle. So at the end of the day, we expect continued progress here. And again, this slide for Delta, and this represents Delta only, is very similar to what our other airline peers, whether you talk to American or United or US Airways, they're seeing very similar trends in their business. We have several key commercial priorities, and all of you are integral to that in some way. Number one is having the right plane in the right market at the right time. You know, you think about demand and supply. Something that Delta back in 2004 and 2005 reworked was our network schedule. You may recall if you were traveling back in those days, you were seeing Delta fly very large aircraft between Atlanta and LaGuardia, Atlanta and Tampa, Atlanta, Orlando, wide-body aircraft that were built by Boeing with the intention of flying overseas. Delta was using some of those aircraft on going very short missions, and we were taking a lot of passengers. But unfortunately, we had a lot more seats than the market demands warranted, so we were having to charge very low fares to fill up those seats. And you know, at the end of the day, when the door shuts, you know, that is the last point you're going to have a revenue opportunity, so we would want to have, you know, as many people on that plane as possible. But at the end of the day, having too many seats resulted in a much lower fare than we could use to offset the cost structure of that route. So in 2005, we embarked on a very ambitious global network plan. We went from being an airline that was 80% domestic and 20% international to one that's grown to be almost 50% domestic and 50% international. So you'll continue seeing Delta broaden its global reach, but doing so is we're getting the right seats in the right place at the right time. And the Northwest merger gives us even more opportunity to do that with airplanes that are somewhat smaller than the previous Delta fleet and aircraft that are very large like the 747. So when we have a need for 400 passengers aircraft, we've got a 747 on that market. In fact, today, if you have the opportunity to fly to Tokyo nonstop out of Atlanta on Delta, you'll be on a 400 passenger aircraft, the 747. Prior to the merger with Northwest, we were using a 767 or a 777 on that route, one that accommodated between 200 and 300 passengers. But for the high demands, we've got the right plane to seize that extra passenger traffic. Winning New York is another priority. New York is the world's most lucrative travel market. It's the world's largest. And at the end of the day, Delta is seeking to expand its share of the New York passenger. We announced earlier this year a transaction with US Airways where Delta would acquire the majority of US Airways slots and facilities at New York's LaGuardia Airport, and in exchange we would give up a portion of our slots and facilities at Washington Reagan Airport. And that transaction is still pending review, but at the end of the day we're seeking to gather a larger share of the New York market. a very premium market, one that with a larger share will give us more opportunities to get those lucrative passengers onto the Delta network, and then obviously, as you saw in the earlier slides, take them to points across 6 continents. Optimize the Pacific. You may have followed over the holidays. Delta was very interested in having Japan Airlines join the SkyTeam Alliance and have an opportunity to transit both our passengers onto the Japan Airlines network out of Tokyo Narita, where we operate a hub, as well as have Japan Airlines traffic transit at Tokyo Narita onto the Delta Airlines system. At the end of the day, Japan Airlines opted to stay with their One World partnership, but we are still very focused on the Pacific, optimizing our route structure there, putting the right plane in the right market. For the routes that are less populated or less densely traveled, put a smaller gauge aircraft. Conversely, put larger aircraft where we can capture additional passenger traffic. So we'll continue reworking our Pacific structure, always looking for the additional opportunities of passenger traffic across Narita. High-value customers. I hope every one of you is a high-value customer at some point in your travels. High-value customers, while every customer is very important to Delta, overall, the high-value customer is even that much more important. In fact, about 5% of our passengers, I believe, give us about 25% of our revenue. So there are passengers that are on Delta several times a week, and they're traveling across the globe, literally, and those passengers give us a very high percentage of our overall revenues on a per-passenger basis. So we're focusing on all passengers. We want to serve the needs of every passenger, and we're investing appropriately to do just that. And then the last item is ancillary revenues, bag fees, for example. I know many of you probably don't like paying bag fees, but I do know you enjoy a low fare. And the ancillary revenues allow us to separate our product and actually charge our passengers for what they use. So if you're carrying on a bag, for instance, you don't want to have part of your base ticket fare pay for the baggage handler because you're not using that individual's services. Maybe you're on a plane and you're not interested in a meal that Delta's providing. Well, now it's not part of your base ticket fare. Those kind of things we've separated from the base ticket, but it is providing a huge source of opportunity for Delta. Also, what we've done is we've embarked over the past several years on growing our non-passenger business. So cargo, for example, cargo is about $1 billion enterprise, at least last year, and the prior years it was. We've shrunk that a bit as we've grounded many of our freighters. But at the end of the day, we also have about a $500 million revenue business from doing maintenance work for non-Delta airlines. We've grown that business. In fact, now we're the largest North American airline provider where we do work for other airlines across the globe, right here in Atlanta for the most part, servicing their engines, painting their aircraft, and doing other value-added services to their aircraft that they give Delta the opportunity to do. That's over $500 million. We also have a ground handling business that does staffing. We have we call Delta Air Elite, a business that actually serves the needs of some of our customers that want a private jet experience, one that's able to go on their schedule, similar to a charter. We offer that opportunity. So we're always looking at other non-passenger opportunities to supplement our top-line revenue. Obviously, we remain a passenger revenue airline, and that's, for the most part, where 90% of our revenues come from. But at the end of the day, there is significant other opportunities that we're pursuing. The merger with Northwest Airlines, I mentioned it occurred about 18 months ago is when we legally acquired Northwest, and it's progressing very, very well. And in many ways, hopefully you have seen some of the effects of that merger, but in other ways, I absolutely hope you haven't seen some of the effects of that merger. And I'll give you the case in point. If you had World Perks frequent flyer miles, which is the former program of Northwest, hopefully last October you saw those miles integrate into your SkyMiles account, and hopefully it didn't cause you any noise. And you know, for the majority of our passengers, it went very smoothly. The reservation systems, prior to the last weekend in January of this year, you could have gone to nwa.com or delta.com to book a trip on Delta. We migrated all of the Northwest reservation platform onto the Delta platform. That went on behind the scenes. Hopefully you didn't see any hiccups or have any of your travels disrupted. We purposely put the technology integration towards the back end of our overall integration processes. We wanted to make sure it was well tested because at the end of the day for airlines, technology is so critical. And some of that technology you'll never see or even need to know about, but some of the technology is very critical to you. You want to be able to go onto delta.com and book a trip and be in control of your travel experience. You want to go to a kiosk, I hope for the most part, and manage your check-in process. You can do seat assignments and pay for upgrades and other things, but it's all in your hands as opposed to having to wait in a line or get in a queue and work with a Delta representative. We do offer that, however, but for the most part, customers say they like the technology experience, and we're here to enhance that overall experience. But we're just about done with the rebranding of the airline. In fact, if you're at Hartsfield and you happen to see an aircraft that still is in the Northwest livery, the paint job, it's likely a regional jet that will be painted throughout the course of 2010. But for the most part, the aircraft that we intend to fly beyond the summer have all received the Delta branding. The onboard experience is now harmonized, so if you flew Delta or Northwest aircraft or pre-merger Northwest aircraft, you'd see the same kind of onboard experience. Uniforms are consistent, and we've really strived hard to get the processes consistent, so you as a passenger just see one seamless operation. We've been connecting the pre-merger Delta and the pre-merger Northwest hubs. Minneapolis, Memphis, Detroit, for example, are pre-merger Northwest hubs. Those flight schedules are now dovetailed into the Delta flight schedules, so now we can transit passengers not only across the Atlanta, Cincinnati, JFK, Salt Lake City hubs, we can also give you travel opportunities to connect across Memphis, Detroit, Minneapolis, and then as well as Tokyo, Narita, where we operate our Pacific hubs. So a lot more connectivity, a lot more travel options for you, our passengers. As I mentioned, we now have a #1 or #2 presence across all of the markets we serve. And at the end of the day, really what remains, and it's only a couple items, but they are something that is not minor in nature. One is the representation of some of our employees. At Delta, prior to the merger, we were able to conclude the representation for our pilots. Our pilots are represented by a group called ALPA, the Airline Pilots Association International. And this was the first airline merger in history where a contract was agreed to prior to the consummation of the merger. Since that time, our mechanic employees have elected to not be represented, but we still have representation open for our flight attendants, our airport workers, and our reservation workers, and that's ongoing. But something that we're very hopeful for is to resolve this quickly, because we want representation to be decided for our employees, and I know they want the same thing. So that's really one of the larger open items that we need to complete before we can successfully close the integration process. But from your perspective, in terms of the travel ribbon, hopefully from your perspective it is all seamless now, and certainly if it's not, we're closing those open gaps very quickly. One of the other things that is important to an airline is fuel hedging. And at Delta, we do employ what we call a systematic fuel hedging program. And in that, we are always in the market buying fuel hedges. And we're hedging more of the closer in quarters, but we're also hedging out 18 months. And the reason we do that is not to get in the market and make a fast profit on a fuel hedge contract, but rather we're trying to remove the volatility. If you watch fuel prices, it really is a roller coaster. It's up, it's down, and sometimes it's very large swings. And that puts a lot of pressure on an airline. When you think about the finances, you're trying to manage cash flow. You're also trying to manage what your income statement and your earnings expectations are going to be. And fuel hedges give you an instrument to have predictability and really control that volatility. So fuel might be moving in a band this wide, but by employing fuel hedges, you can bring some predictivity to it and really narrow that volatility nicely. And what we do at Delta, unlike what we were doing in the prior years where we had those very significant fuel hedge losses, we're using an instrument called a call option. And that call option for us with fuel hedges allows us to lock in a cap on a fuel price, but it also allows us to enjoy the fuel price drop if it drops. So last year, if we had call options rather than what we were using last year was majority of swaps and collars where you're really locked in to a specific price. If we had call options a year ago, we would have been able to enjoy that $35 fuel price when it fell so precipitously, but instead we were locked in at the higher prices, and that's what generated those losses. But as you look at here, for the first and second quarters, we're just about 50% hedged. We've got hedging still going on in the third and fourth quarters of this year, and then we're hedging out into 2011 as well. So continue buying these hedges, so if market fuel prices are going up or going down, that's obviously impacting the overall value of our hedges, but at the end of the day, we're hedging the volatility out of our fuel expense line, and that gives us predictability and better able to predict our cash flow and earnings. Something else that's very important in any business, but in particular for the airline business, is cost. You've got to be a cost leader. And back in 2005, both Delta and Northwest individually had lost their cost advantage. We went through bankruptcy and restructured ourselves, and we came out, Delta and Northwest, as the lowest cost airlines of the global hub and spoke carriers. Now, AirTran, JetBlue, and Southwest still have overall lower costs, but they operate specifically in the domestic markets, which is obviously much cheaper to operate than you can think about the cost of an international mission. International trips are more costly because the catering, there's the meals on board, the passenger experience is different. It's typically more expensive to fly to an international destination. You've got higher landing costs, higher facility costs. You also have the cost of running a federal inspection station and those kind of obligations that go into the overall cost. But at the end of the day, we've got to be the cost leader. And you can see for 2009 and 2010, where our costs came in both on a consolidated basis and also on a mainline basis. And the difference between those two is the regional jets. So consolidated for Delta is the big airline planes you see, we call that the mainline, but also the regional jets. And then below you can see just mainline, which is just those aircraft that fly internationally, as well as many of our domestic markets are mainline operated. We're striving to keep costs flat or better. And we do have pressures. We have higher maintenance costs, for example, this year. We've got more volume. We pushed out some maintenance into future years, and this is one of the years where that maintenance has to be done. We've got investments in our Delta employees. You know, something that we approach differently than many of our airline peers is we recognize that we're in a customer service business, and as a customer service business, we rely on our employee to give superior service. And if we're not investing in our employee, it's hard for us to picture how that employee is able to give superior service. So we gave raises last year to our employees. Every employee below the director level received a raise in the 3 to 4%, or received a raise consistent with their contract that was in place. And we continued investing, whereas other airlines are doing just the opposite, pulling wages away or pulling benefits away from their employees. We're doing just the opposite because we recognize investing in our Delta people will enable them to give superior service to our customers, which in turn will bring our customers back to Delta. And that's at the end of the day what's most important. So we do have those kind of pressures, but as you can see on the bottom half of the left side, we've got many opportunities to offset those pressures. And by offsetting those pressures, we're still able to invest in our product, invest in our people, invest in our maintenance and other infrastructure needs, but pay for it by merger synergies, by contracts that we're getting. You know, all of you in Atlanta, I suspect you're Coke drinkers. Maybe you're a Pepsi drinker, but for the most part, you're probably Coca-Cola. At the merger time, Delta was serving Coca-Cola products, Northwest was serving Pepsi products. We're still consuming the same amount of sodas overall, but by moving our contract to one vendor, and in this case we went to the Coca-Cola contract, we're able to secure even better pricing for all of that soda. And we were able also to satisfy Pepsi by using Frito-Lay snacks on our aircraft. So we really got the best of both. But that's an example of where the merger brings us economies of scale. And economies of scale, we're able to secure the inventory and the product cheaper than what we were doing before the merger. That's an example of something that helps pay for the investments in our infrastructure and in our people. So looking for ways to offset those costs, that's how Delta is able to keep our costs flat. And by being cost competitive, by really being the cost leader, we're able to lead the airline space as opposed to struggling and following along like Delta and Northwest did individually for many years leading up to the 2005 restructuring. So, in terms of our balance sheet, something we're very focused on is our debt. We have about $17 billion of net debt. That's our debt obligation less the cash that we have in the bank. And by generating cash from the business, if you think about that Delta paycheck I was referring to, the cash coming in less cash going out for expenses, we'll generate between $9 and $10 billion of operating cash flow over the next 3 years. We're going to invest about $3 to $4 billion in infrastructure renewal, in new aircraft, in facility renewal, in technology. But at the end of the day, that's going to give us about $6 billion over those 3 years to put back on our balance sheet. So we're going to pay down debt with cash instead of refinancing that debt like we were doing and most other airlines were doing over the years. That'll make us leaner, that'll make us more cost effective. And also when the next recession comes, and it will come, I hope it's not anywhere near the magnitude of this current recession, but there will be another down period. We'll be a much better player in that period because we will be much leaner, we'll have less debt obligations, and as you know, debt includes interest expense, and that's really what makes it challenging to be a profitable, viable enterprise when you have a lot of debt, particularly in a recessionary period. Now, something that's very unique to Delta is what we call the flight plan, and unique to Delta in particular because every employee has access to this flight plan. And I know the print is small. In the front cover of the books that you were provided, it's a copy of the slide here. And every employee has access to this. This is a chart that's in employee break rooms, in work areas, and in back offices, particularly at the headquarters. And what this shows is every every one of the 75,000 employees at Delta is integral to the success of achieving our goals. And these are our goals. So if you work in finance, you can see there's a finance column. If you work in the operation or the customer service areas, you've got examples of the goals there. But every one of our employees is faced with goals each and every day. And those goals, as we execute them successfully, leads to our long-term success. And that's what our mission is. So I leave you that just to see for illustration what some of the goals are that are applicable to our employees. And just because I work in finance, for example, that doesn't mean that there aren't operational or customer service or network goals that I too can help fulfill. But at the end of the day, we want all of our employees to understand what the goals are for the company, because this is a company run by 75,000 employees. Every one is integral to the success of our company. It isn't, a function where there's a headquarters and those headquarters people deal with all that stuff. I'm just going to serve my customer. That's important, serving the customer, but understanding how serving that customer fits into the overall success for Delta, that too is very, very important to us. So I leave you that to look at and understand for Delta, particularly as you fly. Hopefully you're seeing these goals in action. And I think my last slide is really just an interesting factoid about what Delta means to Atlanta and what Atlanta means to Delta. Hartsfield-Jackson International Airport is a huge enterprise. It generates about $45 billion of economic value for the community. Delta in particular, out of Hartsfield, at our peak summer schedule, almost 1,100 daily flights out of Hartsfield. Now the terminal that you see today, it was added on back in around 1995 timeframe. Terminal E was added. But basically that structure there opened in fall of 1980. Delta had about 300 flights a day. So we've gone from 300 flights a day to almost 1,100 flights a day. And you can see the destinations we serve, over 230 nonstop destinations. We've added 54 unique markets, both domestically and internationally, since 2003, in almost 50 unique countries. And we continue growing that landscape. I'm hopeful that when the new international terminal opens in a couple years, we'll have even more opportunities to serve parts of the world direct nonstop from Atlanta than we do today. But at the end of the day, you can see how critical Delta is to Atlanta. But interestingly, or importantly, Delta and Atlanta have a partnership. And we've done very well in Atlanta serving our customers, the community, and the partnerships we have with our communities we serve, both serving on charitable boards and other organizations and memberships. Delta's a very important part of the community, and we value the partnership greatly. So at the end of the day, Delta's very fortunate to be in Atlanta. We're fortunate for our customer base, and we're excited about the opportunities that lie ahead for us in the coming years. I mentioned 54 new destinations. 37 of those destinations are across the globe outside of the United States. And I think that's what you'll see going forward. You may see Delta tweaking service here and there domestically. We may add new destinations occasionally, but really where the global growth opportunities lie is outside of the United States. In Africa, for example, we entered service in Africa in 2005. Those markets have done very, very well for us. We now have 6 destinations in Africa, and there's 4 more pending government approval that we're excited about the opportunity to continue serving Africa, both from Atlanta as well as our JFK International Hub. So continued growth across the globe. We always welcome opportunities to serve new markets, and as there's a new market opportunity, we want to be the first in that market to expand our presence and get that first mover advantage. Interestingly, in Africa, we're the only carrier that serves Africa nonstop with scheduled service from the United States. And really no other carrier has come in since 2005 to try to compete with us on that service. United has announced plans later this year to go into Africa, but interestingly, they have not yet published schedules and such with times and frequencies, so I'm not sure that they ultimately will do the Africa service. But at the end of the day, we've got a very exciting future ahead of us, not only in Africa, but across the world. And certainly, it's incumbent upon folks like yourselves to, as you graduate and move on into the business community, get on the road and travel, and don't forget the importance of a face-to-face business meeting. And there is only one airline to fly, and you know which one it is. So. And then this is really our flagship aircraft on the Delta side. This is the 777. We call it the 777LR for long range. This is the aircraft you'd fly out of Atlanta going over to Sydney, for example. So very nice amenities, flatbed seats. You can enjoy that aircraft, audio-visual on demand at every seat. A lot of nice amenities, giving you all the more reason to enhance your customer experience and, again, get you back to Delta for your next trip. So with that, I welcome the opportunity to field any questions you have. Hopefully we have some time to do that. Anything about what I talked about or anything on your minds I'd love to discuss.
I know she said in 2009 that Delta's cash flow went from $5 billion to
Yep.
5.4 billion cash
That's right.
flow.
That's our ending cash balance, right?
The ending
Yep.
cash balance. However, they lost $1.1
Right.
billion.
Yep.
Would it be as far as better suited to pay down some of the debt as opposed to increasing their cash flow?
Very good point, and that's what we're analyzing right now. And in fact, what you'll see us do is just that in the coming periods. The reason we didn't do more of that up to this point was because of the uncertainty of the recession. We wanted to hold on to our cash, but as we get more comfortable that the recession is unwinding, you will see us doing just that. And that slide I showed that had the 17 billion net debt going down to about 10 billion net debt, that's doing exactly what you're suggesting, and we will do that. That's what we want to do. Yeah, good point. Hi.
My dad works for Delta, and
So you fly Delta a lot, I hope.
yeah.
Good deal.
And I was wondering, he's about to retire in another year or two, and I was wondering, does my flight privilege?
Don't quote me on this, but I believe as long as you're a dependent or student, I believe it continues, but don't quote me on that. Now that I'm being recorded, I'm very worried about this. But regardless, we welcome the opportunity to fly Delta, either non-revenue or revenue. What's your dad do at Delta?
Flight scheduler?
Yep, yep. So he works over at the headquarters complex?
Yeah.
Good deal. How many years has he been with Delta?
27.
Yeah. Does he have any hair left? Yeah? Okay, good, good. No, I joke in the airline business, you know, each year of service is more like 7 years in another industry. It's always challenging. I had a full head of hair just a couple weeks ago, but it really is a fun business. I can't think of an industry I'd rather be in than the airline business. I guess my second passion is automobiles, but that's a far distant passion. The airline business is always throwing a new challenge at you. And you know, folks like yourselves studying in school the contemporary issues, you know, you are just as valuable to us at Delta coming right out of school as someone that's been out of school 15 years or more, because you're studying contemporary ideas. You've got ideas that, you know, I haven't thought of because I've been outside of the classroom for so long, and working together and having individuals of diverse backgrounds and ideas, that's what makes Delta a success. So I'm sorry your father's going to be retiring soon, but I welcome the opportunity for someone else to come in and share their insight.
We've flown with Delta since the Eastern merger.
Yeah.
And I don't mind paying the few extra dollars because of the incentives that have been added to your aircrafts. But the question I have, with you focusing on the customer service actually in the air, I think there might be losing sight of the customer service at the ports.
Yeah,
You know, at
on the
gates.
ground. Yeah.
And
Yep.
that's really been leaving a bad taste in
Yep.
my mouth. In the
Yep.
last year, I've flown 3 times. And like I said, I didn't mind paying the extra dollar for the flight, but just trying to get my ticket or get onto
Yep.
through the gate.
The pre-departure
awful
experience.
customers.
No, and I appreciate that feedback. Something that we have strived to do is satisfy the needs of our customers, but at the same time deliver an efficient and a cost-effective product. And something that, when it works well, is our technology, in the sense that after you arrive at the airport, you may have checked in online on delta.com, you've got your boarding card in hand, maybe you have baggage to check or maybe you don't, but once you get through that TSA experience, you come to the gate, there's not much interaction that you should have with our customer service agent unless you need something. Maybe you need to change a seat, or maybe you realize I'm not going to make my flight, or for whatever reason. That's where we have had some challenges, and we're trying to balance that and figure out the optimal way to do just that. I was in the airport Friday, and if you remember Friday, we had very bad weather in Atlanta. It seems that even if there's a sprinkle outside, Hartsfield's backing up, and because Hartsfield is so large, flights across the world are also backing up when Hartsfield's having a sprinkle. And then compound that with the 3 snowfalls we've had, it's remarkable. But your point is very well taken. We need to be able to satisfy your travel needs, whatever they are, leading up to that experience, but at the same time be able to deliver that cost effectively. And what we've done over the years is, through the kiosk deployment and through the delta.com enhancements and other technology development we've done, is redirect those customer service agents that previously were working with you face-to-face and redirect them into other areas, such as the onboard experience or other amenities behind the scenes. So continue flying with us, please, and hopefully you will see a better experience before you get on the plane. It sounds like you're pleased with the onboard part?
Yes,
It's
and
okay.
even getting through security and check-in.
Yep.
Just at
Good.
the gates, the customer service is additional.
Yeah, yeah. And do you notice that at Atlanta only, or do you see it system-wide when you travel?
Actually, it was more in the Dallas.
Was it?
um,
Yep, okay.
Area that I had the issue.
Okay. Well, I'm grateful you are flying Delta, number one, out of Atlanta, but also out of Dallas, because we compete very aggressively with American Airlines, who has a very large operation there. So thank you for that. But don't hesitate to give that feedback. It's important for us to know that. But also, I think you'll find an even better experience going forward. So thank you. Hi.
I used to machine, when I was a machinist, work on some of Delta airline engines.
Mm-hmm.
You mentioned that you guys also maintain engines of your competitors.
That's right. Yeah.
Do you think that helps them maybe be more competitive with you?
Yes and no. What it does enable is Delta to better utilize its resources. So, and you may have experienced this when you were working on those engines. There's times where you've got a lull in your schedule. You're waiting for parts to come, or the parts are there, but you know there's a queuing process. By bringing in other work, we're able to supplement those lulls and keep the work more evenly paced. And also, we can give our employees more opportunities for a steady employment instead of having the volatility of different work hours and different schedules. We are possibly giving an advantage to our competitors because we can do it cheaper than they can, or maybe we can do it cheaper than another third party. But at the end of the day, it benefits us more to do the work ourselves and give a very steady employment opportunity for our people, and it enhances our cash flow and also our resources than letting the work go elsewhere.
Okay, the second part. I used to work for Pratt & Whitney,
Mhm.
actually building the engine.
Yeah.
I used to work on vanes and blades.
Right.
A lot of that work has gone overseas to like Korea.
Mhm.
How do you think that helps or hurts your competitiveness or purchasing?
Yeah, no, some of the work that Delta does for our own aircraft, we've sent overseas. Some of the lower margin work that we don't have a competitive advantage on, we've put that work overseas, and then we've redirected those Delta employees to working in the engine shop and working on other more core and complex projects themselves here. At the end of the day, we maintain auditing and other standards to ensure that the work that's being done overseas for Delta is up to our own standards, and we're not going to compromise that. At the end of the day, if it's work that's being done overseas that can be done more cost effectively, it does benefit us. Now, if Pratt & Whitney is sending its own work over there and it's making it cheaper and more cost effective and it's competing with our margin, that really makes us have to be on our toes and make sure we do the work right. If we do it right and we maintain our cost advantage, we're still superior to what's going on overseas. And if it's not, that becomes something that maybe we should be just outsourcing the work ourselves as well. But again, we're focused on not outsource. We might outsource some work, but we're not going to outsource the people. We'll take those Delta resources and put them on other Delta work because that's something that we've committed is we're very focused on our people.
When you show a slide that showed that in 2009 we hit a low, or Delta hit a low of 23%
For unit revenue, that's right.
Revenue in comparison to 2008 figures, being that 2008 was pretty deep into the recession that we were
Right.
experiencing. How does that truly compare to a good year?
Like 2007.
Perhaps.
We're still down. We're still down several percent. The gap is not closed yet, but it's obviously far better now than it was last year. And we did start seeing decline into 2008, but the big hit really happened for us in 2009. Because of advanced bookings and things, some of those revenues stayed high, but by the time you got to June, we were at our low point, and that's why you see year over year 23% down.
So you expect like maybe late 2010 to be actually more comparable to 2007? Perhaps?
It's going to be certainly more comparable than 2009 was 2007. It may be 2011 before we fully get there. Passenger demand is there. It's just a question of what is the yield per passenger that's still up in the air. And again, we're not near those 2007 levels.
Thanks.
There's a question over here.
How is the merger going to affect the employees of Northwest?
Mhm.
I mean, are they going to be brought along to Delta?
Sure, sure. In fact, what we committed to when we announced the merger with Northwest was that no frontline employee would lose their job as a result of the merger. So we do have more hubs than we had before. We obviously have more employees than we had before, but we're committed to using each and every frontline employee as post-merger, and that's exactly what we're doing. Now, some of the back office areas, like take finance, for example, when the merger was consummated, there were about 900 finance professionals across both companies. We're taking that number down considerably. We don't need 2 finance departments. We don't need 2 human resource departments, and similar duplicity across the company. We have eliminated some of those administrative or merit positions, but the way Delta has typically done it is much different than other companies. We offer a voluntary program providing an incentive and an opportunity to help someone transition from Delta to another work opportunity. So we do our very, very best to not involuntarily release any employee, whether they're frontline or back office. But again, we've committed for the frontline employees, that would be our customer-facing employees as well as the folks that work at the airport or reservations. Those folks, as a result of the merger, would not lose their job regardless. So, and we're very, very committed to that. Hi.
A lot of companies are advertising more leg space for additional costs. And what are you doing for Delta as far as the people that are obese? We have thousands of people that are obese and that choose to rent cars and things like that instead of being cramped up on an airplane. So what are you doing to address that issue?
Yeah, in terms of the passenger comfort and safety are critical considerations. Safety is always the most relevant, and then passenger comfort comes next. And in the event that we can reaccommodate a passenger that is obese, we will do just that. There is a lot of controversy in the air because there's not many empty seats on the planes. And if you think about it, when was the last time you had a seat next to you empty? It's rare. So it's complicated when you have a passenger that is heavier than an average passenger, and they have every right to be accommodated. Everyone needs to be accommodated. So that's where the challenge comes in, and we do our best to reaccommodate the passengers on the aircraft from a seating perspective so we can accommodate everyone. And again, where our biggest challenge comes is when it's a full flight to begin with. And then what even complicates it more is when you have days like last Friday and even when there's a little sprinkle in the air, because then we start thinning the schedule. So when the schedule thins, instead of having 14 hourly flights to LaGuardia throughout the day, we might take it down to 8 or 9. That's even fewer seats to reaccommodate all of our passengers. So, but no, every passenger we're very focused on individually.
Well, what happens with just seat adjustments? Like some planes, I've forgotten what airline is advertising. They've actually made changes to the seating. You know, to have just a few.
Yep.
The whole plane has to be.
Right. Right, and we do have those. What we do is we restrict them for the gate agent to assign. So when you go into delta.com, for example, and you're looking for a seat, you might see a seat map that has 10 open seats scattered across the plane. There might be 16 or 20 open seats in reality, but we're holding those for the gate agent to assign. So if there's a passenger of size, or maybe there's another passenger need, there are seats with more leg room or more width that can accommodate different passenger needs. So we do that. It's not online, it's less visible to a passenger because they are restricted for gate agent use for just that. Good.
Just a question about the follow-up on, for future opportunities for careers and internships, could you speak a little bit about that?
Sure.
What you might be looking for in the future?
Absolutely. We have we call it an MBA rotational program. We hire MBAs. This year we're going to hire about 7, I believe. Some years we've hired as many as 15 or 18. And they come into Delta, come into finance, and they work at least one rotation, so 2 different stints. One of those stints will be in a corporate job, so they might work in corporate financial planning or financial analysis, flight profitability, a treasury function. They may work in a supply chain or purchasing function. But then at the end of that 1 year, they'll go into an opposite function, which will be a division function. So in finance, we have a finance shop assigned to every division. So the maintenance division has a finance shop, the flight operations, as well as the corporate support areas like legal and finance and human resources. We have finance shops. So our MBA program individuals will also work a stint there. So at the end of your 2 or 3 years in finance, you've had a corporate perspective and a divisional perspective, and in doing so, it makes you very marketable to secure a manager opportunity, and you graduate from our MBA program. We have a similar structure on an undergrad program, although the undergrads tend to stay in the program a little longer as opposed to after 2 or 3 years getting promoted into a manager slot. And we welcome the opportunities. We go campus-wide. Some campuses we interview on campus physically. Other campuses we do resume drops, and I welcome opportunities for talented folks. Our hiring, because of the Northwest merger, it's thinner. That's why this year it's only 7 MBAs, because we've got a large pool of talent available to draw from. But nonetheless, we are committed to bringing folks in like yourselves. I mean, you have contemporary skills. I graduated in 1993. Please don't quiz me on what you're doing, because I absolutely don't recall it. But you bring a fresh set of ideas, and you travel just like I travel, and we welcome those ideas. At the end of the day, that's our philosophy. So even in very lean times, we will still be bringing new finance talent in, because today's finance talent is tomorrow's leaders. I mean, I started at American Airlines, but in the exact same kind of program, and you get that core training. And we've got folks that were in our MBA program that have rotated out of finance. One of our individuals, she leads the training for our flight attendants now. So we welcome getting finance-minded people into the operation, because that just gives further strengthening across the management ranks. And our most successful leaders, if you look at the leaders of Delta, the most successful ones are the ones that have had a stint in finance, a stint in operations of some nature, and you might come back into finance. But the other great thing about a company like Delta, and this isn't just applicable to Delta, but a company like Delta can give you an opportunity for a couple years, 5 years, or 30 years. How long has your father worked at Delta?
28.
Yep, see? And Delta's a place you can get some good training and then move on if you like, or you can do your whole career at Delta and be challenged each and every time and have a host of different division responsibilities. So it's a great opportunity.
So on the corporate level, are they mostly looking for master's degrees?
We do hire on the corporate level more MBAs than undergrad, but we do hire undergrads. It's really a function of the cycle we're in. And right now, because we've got a lot of Northwest talent that we also have to integrate into the business, that's why we're only hiring. We've got 7 MBAs. I failed to mention the intern program. We also have a summer intern program that typically is MBA, but occasionally we do have a BBA or an undergrad student in there as well. The work you do as an intern is identical to the work you would do when you come into Delta as a full-time employee. It's just at the end of the summer you go back to school. So it's really a lot of fun being an intern. I was an intern, by the way.
Thank you very much.
Sure. Thank you. I appreciate your interest in Delta.
Thank you so much for being
It's
here.
my pleasure.
It is hard to identify Atlanta without identifying Delta.
Thank you.
Thank you.
We're pleased to be here.
And thank you for being
Thank
in
you.
Clayton State.
I appreciate it. Very nice. Appreciate the invitation. Thank you.